Welcome to today's video by Forex without noise. Today we'll be talking about simple chart analysis, simple steps most traders get wrong while analyzing Forex charts. Sit tight while we dissect this. Most traders lose money not because the market is hard, that's the simple truth, but because they analyze chart in the wrong way. In this video, I'll break down simple chart analysis using 7 steps most traders completely ignore when analyzing any Forex chart. Stop zooming in too much. When you focus only on the 1 minute or 5 minutes chart, you miss the bigger market direction. Always start from the higher time frame like the H4, H1, or the daily, as the case may be. Identify the overall trend. Step 3. Mark key support levels. And of course, this support and resistance indicator is going to help you to do that. If you need this support and resistance indicator, you can get it from us. It's going to help you to mark out the support levels. Learn to manage risk. Okay, so let's dive into this properly. First of all, you have to learn how to identify trend. How do you do that? This is how to identify trend. There are several ways you can do that, but I'm going to introduce you to how to draw your trend line. Okay, how you can use your trend line to identify your trend. How do you do that? All you just need to do, you click on this, you pick it. Okay, then just extend it. Okay, extend it beyond the current market level, the current market price, as the case may be. So how do you do this actually? Okay, just put it at the tip of okay, let me demonstrate this. If you look very well, you can see that I'm coming. Can you see this? If you look very well, you can see that at this point we have 2 candles. We have the bullish and we have the bearish. Here we have the bullish and we have the bearish as well. You can see here we have the bearish and the bullish. So if you want to draw your trend line correctly, you start it from the point where you have the bullish and the bearish. Just like you see, I started it somewhere here. If I want to extend it further, maybe I want to start drawing from here. I'll start it from here, right? But the rule is this. You must understand this rule. The rule is that it must be at the tip of the candles. It should not cut across the middle of the candle. It should be at the tip. And at the same time, it should touch at least 2 levels. Okay, it should touch at least two. Okay, it must touch at least 2. Do you get that right? It must touch at least 2. Okay, if you cannot connect at least 2, just know that something is wrong. Okay, so at this point, I was able to connect here, and also connect here. Can you see that? Which is perfect. Okay, so now let me draw another one, because of course we need 2. One at the top, one at the bottom. Now let me try and connect from here as well. Remember, I said at least you must connect 2 levels. 2 levels. Okay, at least 2 levels. If you look very well, you can see I was able to connect here. I was able to connect here. right? So now, looking at this very well, okay, you can see that from here till this point, it's like, not it's like this is an upward trend. But at this point, you can see that we have sideways market. The market is sideways. When do we say that the market is sideways? It's moving like this. Can you see that? Can you see that? Whenever you see something like this, it's called sideways market. It moves from the support, sorry, from the resistance. Can you see that? To the support, it moves back to the resistance, comes back here, it moves back here, it comes back here. It moves. If you must trade this kind of market, all you just need to do, you place your buy somewhere here, place your stop loss somewhere here, put your TP here. And when the market gets to this point, you place a sell here, you place your stop loss here, you place your TP here. When you hit your TP, you place another until the market breaks here or breaks here. Do you understand? So you keep, does that make sense to you? So it's as simple as that. So back to this. Now, this is an upward trend, right? It's obvious. So the question is, at what point should you take either a buy trade or a sell trade? When you should expect taking either a buy trade or a sell trade is when the market breaks this upward level. Okay, let's say the market breaks this level right now. Okay, of course, let's assume that it breaks this trend line. And of course, you can see that where it is now, it's a support zone. If it breaks this support zone and there's a retest to this, resistance, if it breaks this resistance level and there is a retest to the resistance level, that's when you can actually place a buy. And when you place a buy, your stop loss should be here. And if it breaks this lower trend line, let's assume it breaks this lower trend line and it also break this support level and it retested the support level. So let me draw it so that you see. So for you to take a buy, you wait for the market to break this level. If it breaks this market level, if it breaks this level, right? And it made a retest like this. Sorry, let me clean this properly. Let's say, for instance, the market breaks this level like this, and it made a retest to this zone, and it couldn't break it downward. At this point, you can take a buy. And when you take a buy, the stop loss should be here, right? And if it breaks it downward like this, and it made a retest, and it couldn't continue, you can take your sell somewhere here, and your stop loss should be here, right? Always ensure that your stop loss and TP is in this ratio, 1:2. That means that if your stop loss is 20 pips, your TP should be 40 pips, 40 pips. And if your stop loss is 10 pips, your TP should be nothing less than 20 pips. Does that make sense to you? Always maintain this. It's very important. Okay. So first of all, you must draw your trend line. Okay. Let me see if I can show you how to draw. This is an upward trend, right? It's obvious based on what we saw. Let's see if we can spot a downward trend. Yeah, let's see if we can spot a downward trend. Okay, from here, let's see this. You pick your trend line. Remember what I told you on how to draw the line? You must target at least two key level, right? two key level. If you can't get at least two key level, forget about it. Okay, does that make sense to you? Mere looking at this, you know that this is a typical downtrend, right? At this point, based on what I just taught you right now, okay, based on what I just taught you, how do you place a trade? This is how to place a trade. Do not rush and place a trade immediately the candle breaks this upper zone. Okay? Allow for a retest. This is what I mean by a retest. You can see how the market moved. It came back to this zone. This is what I mean by a retest. And it could not break this zone downward. You can see where this candle closed. The bullish candle closes above this zone. Since the bullish candle closes above this zone, you can go ahead and trigger your buy, right? And you can see what happened. The market went up, 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 up. Do you understand? So let's assume that your stop loss level is here. You calculate the pip level from your entry to this point. If it's 10 pips, 20 pips, or whatever it is, ensure that your TP is times 2. Ensure that your TP is times 2 of your stop loss value. Does that make sense? So now let's assume you want to place a sell trade. Allow the market to break below this zone. If it breaks below this zone and it made a retest, just like what we saw here, and it could not, break it upward. Immediately a bearish candle closes below this line, go ahead and place a sell while you insert your SL somewhere here. Ensure that your TP is 2 times your SL. Does that make sense? Yes, that's exactly what you should do. I believe this is simple enough. Okay. So with combination of this, okay, it will definitely help you to spot the best, help you to analyze the chart and, spot the best entry for you. What most trader miss is not knowing the chart types and what they review. Of course, there are different types of charts. Okay, like what we are using now is known as this is known as the candlestick. We still have what we call the line charts. Okay, so let me switch it to line charts so that you see. Okay, you need to understand this. You need to understand this clearly. Okay, this is a line chart. Okay, you still see that the line chart also follows what I just explained. You can see there was a break here, right? There was a retest here, and it could not break here downward. Do you understand? So whatever you are using, whether line chart, whether candlestick, or the bar chart, you should be able to interpret it very well. Okay? Most traders fail to understand this. They do not understand their chart, neither do they know how to interpret it. Another thing you have to be careful about is the time frame. Most traders don't even know the time frame. They go to any time frame of their choice and start placing trade. Remember, I told you you should do your analysis on your higher time frame. Start with H1, H4, or daily candle, as the case may be. Do your analysis there. Very important. Identify trend direction. Very important. And I just demonstrated to you how to identify your trend direction. Very simple. Also spot your support and resistance level, which of course, this indicator is going to help you to identify your support and your resistance level. You can actually get this from us. Okay, if you're interested, you can get it from us. It's automatic. It's going to draw this thing for you automatically. You don't need to start, drawing it yourself. It's going to do that automatically. Okay, so recognize key trading chart patterns. Okay, you have to recognize it, like uh the the double shoulder, and all that. You have to know how to identify this. Maybe in our next video we're definitely going to talk about that. But if you want us to make a video about how to identify chart patterns, I think you should comment it so that we can give you the video based on popular demand, not just what we want. Okay, tell us what you want and we're going to show you how to do that. Okay, do not just use indicators. Some newbies will just, when you see their chart, you see indicators everywhere. No, don't do that. Okay, use indicator as a confirmation. Use indicator like your MACD as a confirmation. There is a video we talked about how to use MACD. Okay, you will see it maybe by the end of this video on how to use the MACD. Okay, yes, yes, you will see it. If you watch the video, you're going to see how to use the MACD properly. Okay, it's really very important. Use indicator as a confirmation, not really the primary signal. Okay, and lastly, trade responsibly. Do not overtrade. Don't trade based on emotion. Okay, trading does not respect your emotion. Okay, you have to trade responsibly. If you enjoyed this video and you want us to create a video on how to identify chart pattern, comment in the comment section. And of course, if you're interested in trading with automated system, we have one of the best automated system out there known as VTM Prime and VTM Elite. Okay, you can check the link in the description section. And of course, if you want to trade with the broker which you trade with, the link is in the description section. Do where to create your account using the link. And if you've seen my video for the very first time, do where to subscribe, turn the notification button, and share it with your friends and families. See you in our next video. Bye for now.